Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, October 26, 2023. I'm going to give a quick shout out to my brother Brian. Happy birthday, and I'll probably see you a little bit later on. So let's get started. The geopolitical uncertainty, it's really hitting this market hard, and everybody's pretty scared to get into the market, and rightfully so. There doesn't seem like there's any type of control on it, and everybody's worried that it's going to escalate. And it was one of the reasons why I started saying back in August to start getting long gold. And I was expecting it to drop, which it did, which you guys saw in that report. But the thing is that you have to be able to diversify your portfolio. So the reason why I was looking long gold then, back in August, it was really the Russia-Ukraine war, but you just felt something bubbling, and so what you do is I waited for the pullbacks. That's what I put in the August report, is don't look to buy the GLD until we get down into the 168 range. It's pretty much right where it went, and then we have the geopolitical issues going on in Israel and in the Middle East, I should say, the war that's going on there, and that's really what popped the GLD part of it. But when it popped the GLD, it took the S&P straight down. So now I want to get into the predictive analytics model and where we are right now. So the bearish time frame ended on 1010, and that's pretty much right where my cursor is right here. And we did get a really good bounce, but it was not a full buy mode, and the reason why is, if you look on the daily chart here, we didn't have any bullish divergences at all. So, and that's the first trigger on it. The second one is we didn't really have any extreme sentiment readings. The lowest sentiment readings we were getting were like 18, 25, nothing that was showing any type of capitulation in this market. So the predictive analytics model had the time turning not bearish, not bullish. The sentiment was not bullish, and we didn't have any bullish divergences. But if we look at the 60-minute chart here, back here when we were on 1010, you can see we had some really nice bullish divergences in place. So what that did, it had us exiting our short positions pretty much right at the lows right here. And I wanted to make sure the lows are in before I was getting bullish, because I knew we were going to get a bounce, because we had, sentiment, I think, got down to like 9% when we were here, or 10%. It wasn't anything extreme, but we had the bullish divergences, and the time period was now, it was not bearish anymore. So when we got the big move and then we gapped down, this is what really got me from not being able to get long on this, was we just shot right up, and then they didn't stop. And then we started getting bearish divergences, and we started seeing sentiment getting into the high 80s, 90s. So everybody was getting bullish on the market, and we were running into heavy resistance. So I didn't short it, because the bearish time frame was gone. And we had I wasn't really looking to chase it up here, but I was waiting for a dip to bring it down. And then when it came down, and we had the Middle East uncertainty hit, or the war hit, then I just stepped aside and said, let's just wait for this dust to settle, because I don't want to catch a falling knife when with all this stuff going on. And we didn't, we didn't really have sentiment that was hitting the extreme lows. Well, that all changed. And what I mean by that is, yesterday we had a 4% sentiment reading. I believe today we're going to have a 2% sentiment reading. So the bearish time period was over, where we now have extreme capitulation in the market. We do have some, maybe some bullish divergences on the 60s, but if you look at the daily, we have bullish divergences. So this, as hard as it is right now, and it doesn't mean just to jump in long or anything like that. It just means don't get too bared up in this market, and start picking your spots to possibly look for a long trade. And the long trade that that I've been talking about to our members, has been anywhere from 100 to 300 points on the S&P. I'm not looking for any home run trades like this. I'm looking for a bounce back up into the 4,400, 4,300. But if we're getting long down at these levels, then it's a 200 point gain. And that's what we've been doing for the past 2 years, really month in and month out. And it's why I'm not really too concerned when if I miss a trade. And that's what I've been saying. You have to be patient. So we're getting into the areas where you don't want to get overly bearish on this market right now, and it could go down further. I wanted to, targets I've been saying was 40.58. And then if we break through that, then we're coming down to the 39.45. I don't believe we're getting there, because I think this support level, we have the 40.58, and then we have the 40.51. This is some pretty strong support. So if it gets down here, this is where I'm going to be looking to buy. But the reason why I'm telling you this, because first of all, like I said, it's going out to everybody, the free members, and as well as our existing members. But it gives us an unfair advantage over every other service out there, because nobody's able to measure time, sentiment, as well as technicals. And when you combine that all together like we do, it's how you go 2 years without a trade. It's the reason why we have hedge funds and money managers coming to us. And we're not going to be, I don't expect to keep this streak going. We are going to have a losing trade. It's just that things have been working out pretty good. And it all changed once the Fed stopped pumping money into the system. And now it's going off of the turn dates. It's going off of sentiment as well as technical. So there's going to be a lot of money to be made. And right now, like I said, dipping your toes in on the long side, it's not bad. But the main thing is, don't get overly bearish on this market. Even if we have a big drop tomorrow, what will happen is you're going to start seeing the say puppet masters on Wall Street, who they really could control the media and whatever we hear. But we're going to have something like there may be some kind of ceasefire. It's not going to take a lot to ignite a 200-point rally, because everybody's bearish on this market. Nobody's bullish. And once we start breaking up, people are going to start scrambling to cover. And that's how you get these big moves. It doesn't change the dynamics of what's going on around the world. It just means there's going to be a massive short covering. And that's really what we look for. And once we get there, and then everybody starts getting very bullish on the market, it's going to drop. It's just this. It's consistent, month in and month out. People get overly bullish at the highs. They get overly bearish at the lows. And when you know that in advance, you just start picking your spots. You wait for the ignition, and then you close it. When everybody starts getting bearish, then you start looking and seeing where to short. But right now, everybody is really, really bearish on this market. And like I said, we took a third of a short position, of a long position at the 41.60 level, and that's fine. We still have 2/3 to go on it. And it's not an easy trade. And I told members that I'm going to be very patient on this, and I want to wait and see that there is a low in place before I start adding into it. But if we start coming down here and we fill our trade, like I said, a move up to the 42.68, 4,300, even up at the 43.88, it's not going to take a lot to get us there. These are these are the types of moves that happen when everybody, well, let me say here, when people get bearish and everyone's leaning to one side. So the predictive analytics model is it's something that's never been seen before. And it's why, I'm really pushing our lifetime membership for people that aren't here, even people that are members. You save a ton of money with it, and it's worth it. And if not, the bare minimum, get look at the 3-month package that we have, where you're billed quarterly at the $299. But knowing this information is going to save you a real lot of money, because anybody who's just doing technical analysis, I'm telling you, they're going to get blown out of the water when they're saying everything needs to be short because we broke the 200-day moving average, and then we see a 200-point run. So let's just get to the other side. So this is the bull bear line, I would say right here, the 42.17. Until the bull bulls get above it, the bears are going to keep trying. You can see on the 15-minute chart here that this is really going to, the 41.84 is the first bull bear line. And if we get above it, then we're going to see a quick move up to the 42.18. Again, I've already showed you the downside pivots. We have 40.85 and then we have the 40.46. So we're not that far from a potential low where we're going to get a bounce, and that's why I'm starting to do it. But as I said, I'm not pushing this. I do very well with trading. This is something we enjoy, giving, letting other people in on a model that nobody else sees. So take advantage of one of the offers that we have out there. At bare minimum, at least know what the gold is doing, because as I said, we have 3 stocks that I put in there. I'm going to be looking for more and sending them out to whoever purchases that. But one was up 10%, one was up 30%, and one was up 40% off the lows, all within 2 weeks. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.